as always, it's your boy Sammy Trade, or you must know me as Sammy. Okay, today I'll be doing our top-down analysis, and also I'll be taking trades using this top-down analysis. Alright, so let me show you something. Alright, so please give me your full attention and your full focus so you can kind of understand something and learn something from this. Alright, so let's dive deep into it. Okay, here right now we are in our daily time frame. Because as usual you have to start from the higher time frame, leveling down to the lower time frame to look for your entry. Alright, so first of all, let's look at market structure. Alright, let's look at market structure. There's a supply zone at this point. As you can see, there's a supply zone at this point, also at this point. There's a supply zone here too. As you can see, it's a point that price always retakes at. Okay, as you can see, price broke past it, came back to retest it. Also here, and 2 times at this place, come back to test it before going back down. As you can see, it's a valid key level, it's a valid supply zone. Alright, and also here there's a demand zone at this point. It's 40,000. You can see there's a demand zone at this point. As you can see, whenever price gets to this point, it reverses back. Also here, it reverses back, and also here there's a demand zone here. As you can see, price came to it before breaking past it, came back also to retest it at this point. So it's a valid one, it's a valid demand zone at this point, because as you can see, price came to it multiple times, but it failed to break past it 1, 2, 3 times, 4 times before it finally break past and come back to retest the same place before heading up. So now let's look for how we can take a trade. Alright, now let's go to the lower time frame. Let's look for opportunity at this point. A clearly uptrend, right? I don't know if you can see this, a clearly uptrend coming from the downside. As you can see, uptrend. So price came to our zone that we draw at the higher time frame. This was a supply zone. We drew at the higher time frame. As you can see here, price came to test it. Okay, the first time, the second time, refuses to break past this point. So now what we're waiting for is either price breaks this supply zone, heading upwards, then come back to retest it, then went up for buy, or price breaks structure. You see the change of structure in market, right? So that's the 2 things we are looking out for. But unfortunately, the one that worked out is a break of structure. Right? It's a change in market structure. As you can see, this was our last high, this was the last low. Why? Because this didn't break past this high at this point. So this is our last low. Let's mark it out. This is our last low at this point. So if you were to use this, it's also cool, but you can also use your premium and discounts. As price breaks are low, are lower high, price breaks are lower high, you wait for your retracements, so you take out your premium and discounts. You draw from the recent high to the recent low. Alright, so you wait for price to come to your discounts before you take a trade or at your key level. Right, so price is at this point, price has come to test our discount. Alright, to test our discount. So as you can see, this evening star at this point, you should have like enter for your trade, then you take profit at the next key level, which is supposed to be right here. Enter for the short not even short. Maybe let me say you entered at this point. Immediately you see this evening star and this bearish huge candlestick. You entered for the trade. Your stop loss little above this high at this point. Then your take profit. Sorry about that. This system is messed up now. Then I take profit at the next level. Just right here. As you can see, price came straight into it. Within this, making this a beautiful trade. Right. As you can see, it was a beautiful trade. So this is how you trade. Do your top down analysis. Right. So this is another example. At this point, you can see a downtrend at this point. Prices creating a lower low, lower high, lower low at this point, lower high, then a lower low, a lower high, and our last lower low at this point. Okay, so what are we waiting for? Is either this trend continues or price breaks past it to the upside. Then we'll look for our buy opportunity. So this was our last lower high at this point. This was our last lower high at this point. Was our last lower high. Now we are waiting for price to come back, retesting this point and also coming down to our discount. So you take out your premium and discount from the low, which is right here, to the high, to the highest point price went up. So let's do that real quick. Take out your premium and discount from the low to the high. It's right here. Alright, as you can see, so we wait for price. Alright, so we wait for price to come, testing our discount. So we'll look for our entry. So as you can see, this point, price came to our discount right here. So if you were to enter, because normally you were to enter for this trade at immediately you see this huge bullish candlestick. Alright, because if you can check properly, all the bullish candlestick coming from this upside are all small candlesticks. Right, this is the huge one bullish candlestick right here, or this also right here. It would be cool if you enter for the trade also right here, but my advice is that never set your stop loss like a little pussy. Right, never set your stop loss like very tiny. Don't do that. If you do that, you will always get swept by the liquidity. Alright, this is a liquidity sweep. Okay, and also when you see like a multiple range at this point where price keep testing this zone, not only once but twice, 3, 4, 5, you know that there is a liquidity being built up at this low right here. Alright, so if you like a newbie and you entered for the trade at this point, if you are like wise enough, if you have the much intelligence and the experience, you would have set your stop loss below this low and not so tight. Okay, so it's sometimes it's more important when you set your stop loss based on market structure. Okay, you don't just set your stop loss anyhow. Okay, if you see that the money you're about to risk on that trade is too much, then don't take that trade. Okay, it's better you do not take that trade than you start risking more than what you have planned to risk in every trade. All right, so know your risk per trade. All right, so if you are like to make this, like make it in a standard way, like trade like a pro, a professional, then you should have waited for this liquidity sweep right here, because as you see this range at this point, your mind should have told you something, that this is a liquidity being built up at this build below this point. Right, there's a liquidity at the low of this range right here. So you wait for the liquidity sweep at this point. If you see the liquidity sweep, then you enter for the trade. Or if you had entered at this point, you set your stop loss at below this low here and not so tight, right? But the best entry would have been if you have entered after the liquidity sweep, which is right here, then your stop loss below it, and you take profit at the next key level, which we draw out on a higher time frame. And the next key level, as you can see, played out perfectly fine. It was a beautiful trade. Alright, so this is how you spot and do your top down analysis. This premium and discount is very important. Right, also an example at this point, you can see a huge downtrend. Right, a huge downtrend. Price has been coming down, but right here you can see this long shadow at this point. If I should go down to the lower time frame, you will see that there is a candlestick that also come down. It's a candlestick that also went all the way down to this point. Alright, these shadows are also candles at the lower time frame, so you should never neglect them. Alright, so this was a failed reaction, because if this supply zone were to do its thing, price would have ended up going all the way down. But this long lower shadow at this point shows that buyers entered into the market, pushing the price upward. As you can see, starting from this point, it's a bullish candle, right? Started from this low and went up to this point. I don't know if you can see it. So that's number one confluences, that buyers have entered into the market, and also price broken structure at this point. Right, this was our last lower high, which is right here, our last lower high at this point. Right, at this point, but now we are seeing a candlestick closing above it. If it were a wick of the candle, if it was the wick of the candle, it would be manageable. Alright, but as you can see, it was a candlestick closing above it. So this is a change of structure. Right, this is a change of structure. So we take out our premium and discounts from the low to the highest point. Price went up, price traded it up. As you can see, we wait for a retracement. As price came back to retest it, then you enter for the trade immediately as you see this bullish candlestick. So you enter for your buy opportunity at this point. Then your stop loss should be a little bit below the the low of the market at this point, then you take profit at the next key level, which is right here. As you can see, a beautiful trade played out perfectly well. So this is how you look out for your entries. And don't forget to spot your market structure from the higher time frame. Right, mark out your market structure, mark out your key levels, right, from the higher time frame, and check the trend of the market at the higher time frame before coming down to the lower time frame to look for your entry. I hope you're understanding something. Let me look for one more example to show you guys. From these examples I've given so far, so as you can see, an uptrend, price has been creating a higher highs and higher low, higher highs and higher low. Now getting to our supply zone. I don't know if you can see this. Price is at our supply zone now. So what are we waiting for? You see that price breaks the supply zone, come back to retest it and head up and skyrocket, or price break structure coming down to the downside. As you can see, price failed. So now price broke structure at this point. I don't know if you can see this. This was our low, our last low at this point. That was our last low. Now price has broke past it. If it was a wick that breaks past this low here, this lower high here, then I would not have considered it. But as you can see, there's a candlestick closing below it, which is making this a change in market structure. Right, so take out our premium and discounts from the high down to the low at price traded into. So we wait patiently for price to come to our discount. As price trade to our discount, then we look for our entry at this point. Right, look for our entry at this point and look for your sell entry. Maybe you entered immediately as you see this big bearish candlestick, then your stop loss will be above this high at this point, then you take profits. Below this demand zone at this point. As you can see, a beautiful trade. Played that perfectly well. Don't know if you have understand something, but if you have understand something from this video I've made so far, or these examples I've made so far, you can go ahead and hit the share button, the like button, and also subscribe to this channel, so you can always get notified anytime I drop content like this, so you can study trading and continue on your way of becoming a profitable trader. Alright, so happy trading day, happy trading week. Peace out.